Chinese tech stocks development. So from holding on to your Chinese tech stocks, how did Chinese tech stock investors get caught in the battle of US and China systems? Here's the Hang Seng Tech Index chart from January 2019 to February 2021. You see there's an uptrend. But the question is, what gives the short sellers the opportunities to short sell Chinese tech stocks? As recent as on this recent Friday, it tanked 2.4% down to 5,680 points, a big drop from over 10,000 to right now 5,600 over points. This is just a quick recap of the series of regulations in China. You can take a look and have mentioned this over my previous videos. And it dropped so even when they call BlackRock China's blunder, by saying that BlackRock had made a terrible call on China to ask investors to invest and put money in China. And one noteworthy point that he mentioned is it's likely for BlackRock and those investors to actually lose money and at the same time damage the national interest of United States and other democracy. HST Hang Seng Tech Index have been making lower high each time over the last 6 months, and I've also highlighted a few critical price points like 6,600, 5,900 and 5,300 so that you can recall and connect as I explained through the various news in these videos. But why lower high? Well, you'll see that initially when the market comes down for Hang Seng Tech Index, it was due to regulatory related news from China. Like for instance, on 9 September 2021, China was reported to slow down game approvals. But as it happens, there's more and more news related to bear speculators being behind this. On 13 September, HST future closed around 6,600, but this critical price point at 6,600 was only to be breached by SEC as they began the process of delisting non-compliant Chinese firms in 2024, announced on 14 September 2021. And HST futures broke down further and post 14 September to test around 5,800 on 6 October 2021. And soon after the support level had been broken and Hang Seng Tech Index closed around 5,800 plus points, there was a news article by Global Times to say that speculators will feel badly in their attacks on Hong Kong stocks, which means that China authorities are well aware of speculative bets. How do I know this? Just see the Meituan news where on 8 October, Meituan was fined 530 million USD and the market reacted happily because the fine was much lower than expected and Hang Seng Tech futures jumped. Even our dear Jack Ma also appeared in Hong Kong to save the tech stocks on 12 October. You see that the market goes out then. And it was even more powerful to see that on 21st October 2021, China hints that the crackdown on Chinese tech giants is coming to an end soon. So since signaling on 21st October, the HST went up only to be distracted by another piece of news. It seems like a recovery of Chinese tech stocks are not welcome, with China Telecom's US operating license revoked. That caused a panic in the Chinese tech stocks as tensions with US rise again. HST's futures came down to around 6,100 points. So to me, I believe that short sellers are likely to form a resistance level around 6,800 points for the Hang Seng Tech futures. Despite the US-China tensions that caused Hang Seng Tech futures coming down from 6,800 points all the way back to around 6,100 points, the good news from Tencent results, which beat expectations, saved Hang Seng Tech futures for a while, since its result was announced on 10 November 2021. But on 18 November, Alibaba poor guidance for these results going forward bring back the momentum downwards. And this downward momentum was further strengthened when on 25th November, at the key support level of 6,100, we saw another news article being released to say that TT is about to be delisted. On 1st December, the downtrend momentum continued as non-Chinese media reported that CSRC intended to ban VIE structure for overseas listing. This led the HST futures continue its downtrend. But on the same night of 1st December, CSRC replied very poorly, very poor response ever seen to refute market news for non-Chinese media. HST's futures struggles to hold above 6,000 points, only to be broken to test a low of around 5,830 points on 3rd December 2021, Friday, Asia time, as SEC finalizes rule that allows it to delist foreign stocks for failure to meet audit requirements. To me, short sellers now are holding a new line of defense of around 6,100 points to continue adding pressure on Chinese tech stocks. US-China tensions are likely to go away in near term, so bear speculators will bet on short selling Chinese tech stocks and Hong Kong market with all these negative news in the market. On 17 December 2021, another timely news release on a Friday. Isn't it incredible to be announced on a Friday? When news on China regulatory crackdown to say that the needs in China regulatory crackdown is online brokers for which their business are going to be banned. Both Tiger Brokers and Futu issued timely outlets to refute the latest news on the same night. And it was the first time that Tiger Brokers and Futu mentioned that they noted that in recent months, certain institutions have been disseminating misleading information in order to profit from short selling their company shares. And they will reserve the right to pursue relevant actions with regulatory bodies and reserve their right to hold the short sellers accountable for spreading false information. Here's what Futu announced. Take a look. Right now, as the new China-US relationship develops, buying Chinese tech stocks would require a good understanding of geopolitical and tech competition between US and China. It is no longer purely a case of when Chinese tech regulations is going to be over, so it might mitigate some pressure on the downside on Chinese tech stocks. But the good news so far is Hang Seng Tech futures still hold above 5,560 points to avoid another down leg or a few down legs. The question now is, will Chinese authorities step in to ratify the news as what they did for VIE structure, find that this news concerning Futu and Tiger Brokers are no longer company-specific news, because this market rumor potentially impact on Hang Seng Tech futures in general for all the Chinese tech stocks. Remember, the saga concerning the regulation impacting the education tech companies like TAI Education, New Oriental, etc. This so-called market rumor has the ability to erode market confidence in Chinese tech stocks, as well as the fundamental stability for investing into Chinese-related assets, ranging from equities, bonds, property, etc. The tough part to ratify this news is that this time around, this particular news involves so many regulatory bodies like People's Bank of China, CSRC, SAFE, and Cyberspace Admin, and coordinated effort to issue a joint statement by all these departments to refute market rumor, like the one that CSRC did for the news concerning market rumor on banning VIE structure, may be more difficult to execute rapidly. What can China do? A prompt response by the various departments to refute market news? Or less regulatory actions on Chinese tech stocks or private reprimand of Chinese techs only to be made available to the top management of Chinese tech? Or they can also even encourage Chinese funds and investors to own Chinese tech stocks and for state funds to buy HST futures. But note that futures instruments are extremely highly leveraged, which they may not be as savvy as the best speculators. My thoughts are that Chinese tech regulations in terms of regulation implementation and reprimand will get less severe as soon as PBOC and China's central authorities realize the real intention of short sellers in shorting Chinese tech stocks. My prediction is that tough Chinese tech regulation will come to an end in 2022. There will be clarity on the overseas investment rules by domestic investors from China, which means that the regulations for online brokers will be out in 2022. I do not expect a ban, rather I expect regulations to be introduced. Bear in mind that I'm a Tiger Brokers retail shareholder. My observations on some of the Chinese tech stock price chart are as follows, because this is a result of what has happened to the Chinese tech index as well as the Chinese tech stocks as a result of speculators being involved in the markets as well. Here's the Alibaba chart, and you will see that Alibaba Hong Kong shares are already at 3 years low. As for Tencent, Tencent is near to 52 weeks low. You see here? Xiaomi is also at 52 weeks low right now, while JD is still doing relatively better compared to Xiaomi, Tencent, and Alibaba, which is around 10% above 52 weeks high. So Kuaishou Tech is slightly 20% above 52 weeks low. Bilibili US shares is already at 52 weeks low at one point. For Trip.com chart, it's almost at 6 years low. Look at this price chart. ZA online chart already at 52 weeks low. To sum it up, the pressure from short sellers will not go away. Look at the short seller Muddy Waters taking aim at Chinese firm KE Holdings.
As always, this should not be construed as any investment or trading advice. Do stay tuned and subscribe to my YouTube channel so that I can be kept updated promptly when I release new videos to reflect the changing market conditions